Well, here we go again. After a dismal start to the summer, home sales in Toronto are expected to skyrocket in the fall. Want to know why? Stick around and I'll tell you all about it, right here, right now. Hi, and welcome back to Everything Toronto. And for those of you new to this channel, I'm Fred Renna, a local real estate broker right here in Toronto, Ontario. And I specialize in helping clients from around the globe relocate to, from, and within the Greater Toronto Area. So far, summer has been an absolute bust for the Toronto real estate market, but apparently that's all about to change. Experts are predicting a major turnaround with a much stronger market in the fall. So let's break it down and find out why. But to do that, we need to take a step back and figure out how we got here in the first place, especially with how hot our market has been over the past few years, where homes were selling like crazy, sometimes within hours of being listed on the market. Now fast forward to today, where all we hear are crickets, with sluggish sales, market uncertainty, and the number of homes for sale going through the roof. How did this happen? There are several reasons for this, so let's go through them. First and foremost, rising interest rates have been a major hurdle. Over the past few years, the Bank of Canada has increased interest rates multiple times to combat inflation. Higher interest rates mean higher mortgage costs, which can deter potential buyers from entering the market. When borrowing money becomes more expensive, many people decide to wait, hoping for a rate cut in the near future. And yes, we've recently seen 2 consecutive rate cuts, which is good news. But up till now, it wasn't enough to bring back buyers. If you want to know what the recent rate cuts mean for Canadians and where interest rates are heading, watch the video linked above. In addition to interest rates, economic uncertainty has played a big role. With the global economy experiencing fluctuations due to various factors like the ongoing impacts of the pandemic, geopolitical tensions, and supply chain disruptions, many Canadians feel uncertain about their financial future. This uncertainty makes them hesitant to make large financial commitments like purchasing a home. Basically, when people are unsure about their job stability or future income, they tend to hold back on big investments. Next, there's been a significant increase in housing supply. Over the last 6 months, we've seen more and more properties coming to the market. New developments and increase in listings have given buyers more choices. While this is generally a positive thing, it also reduced the urgency to buy immediately. Potential buyers now feel they can take their time and choose the best option rather than rushing into a purchase. Another important factor is the tightening of mortgage rules. In recent years, the Canadian government has implemented stricter mortgage regulations to ensure that home buyers are financially stable. These rules, like the stress test, while beneficial for the long-term health of the market, have made it harder for some buyers to qualify for a mortgage, especially with the huge increase in interest rates over the past 2 years. This has led to a decrease in the number of eligible buyers, contributing to the slowdown in sales. And lastly, there's the impact of consumer sentiment. Consumer confidence plays a huge role in the real estate market. When people feel optimistic about their personal finances and the economy, they're more likely to make significant purchases like homes. However, when confidence is low, as it has been recently, people tend to be more cautious. News reports and economic forecasts predicting slower growth and potential downturns can significantly influence buying behavior. Now here's the good news. Despite these challenges, several factors are now aligning to potentially boost the market this fall. Interest rates have shown signs of stabilizing, which might encourage those who were previously hesitant. Additionally, the economy is showing gradual signs of recovery, which could bolster consumer confidence. These elements combined might just be the push the Toronto market needs for a potential turnaround. So what should we expect? Assuming the economy's positive momentum continues, I see a stronger fall market that will lead to a more balanced market in Toronto and in the GTA. Here's how I see things playing out. First, increased sales volume. With decreasing interest rates, more buyers will be motivated to enter the market. This could lead to an uptick in sales, as those who were previously hesitant now feel more confident about securing a mortgage at a predictable rate. Number 2, steady price growth. While we might not see the explosive price increases as previous years, a steady rise in home prices is likely. And believe it or not, despite the slowdown in sales and the increase in inventory over the past year, the average price in Toronto continued to increase year over year, increasing 1.9% from June of last year to June of this year. And I get it, it defies logic, but not if you account for the high demand for housing in Toronto. And if you want to learn all about the ups and downs of average home prices in Toronto, including different home segments like detached homes, semi-detached homes, condos, and townhomes, watch the video linked above. Number 3, a more balanced market. The increased supply of homes coupled with the rise in demand should lead to a more balanced market. This means that bidding wars will be less common and buyers can take their time to find the right property without feeling rushed. Number 4, investor activity. With the potential for stable returns, we can see an increase in investor activity. Properties that generate rental income will be particularly attractive as the rental market remains strong in Toronto. And as we've seen in recent months, rent prices are starting to inch up again after months of modest decreases. Number 5, neighborhood trends. Specific neighborhoods that offer good value or unique amenities might see a sharper increase in activity. Areas with strong public transit links, good schools, and emerging local businesses will be very popular. This also includes neighborhoods with plans of revitalization, like Humber Bay Shores, which has seen a significant redevelopment over the past 10 years. And it's expected to continue with the extraordinary projects at the former Mr. Christie plant, where plans for a vibrant mixed-use community are well underway. It includes the development of several new condo towers over 70 stories tall, housing approximately 7,500 new units. Projects like this around the city will be a big contributor to the market's resurgence expected in the fall. So overall, the fall season is set to breathe new life into the Toronto market, making it a more dynamic and appealing environment for both buyers and sellers. What do you think? Do you feel the Toronto market is set for a comeback? Or are we just not there yet? Drop your thoughts in the comments below. And before I leave you, just a quick reminder that if you're thinking of moving or need help figuring it all out, reach out to us anytime. Every day we get calls from people just like you planning their next move. Whether you're moving to, from, or anywhere within the GTA, we've got you covered. Our team is dedicated to providing tailored solutions that match your needs and timeline to help make your move easy and stress-free. So if you're planning a move, feel free to give us a call, send us a text, or drop us an email. Thanks for watching, subscribing, and liking this video. And don't forget to tap that bell. Thanks again, and I'll see you next time.